Welcome back to Crypto Shockwave, the channel where we break down the biggest stories in the XRP world and give you the analysis that actually matters for your portfolio. $1.7 billion gone in 10 days. That is how much money just fled Bitcoin ETFs. While that was happening, XRP ETFs did something that nobody on Wall Street expected. They went the opposite direction. $35 million flowed into XRP ETFs. In the same 10 days that Bitcoin lost 1.7 billion. Same market, same conditions, completely opposite result. But here's what I need you to stay for, because buried inside this story is a detail that changes everything. A whale just moved $175 million worth of XRP, and the timing of that move is either the most dangerous signal of the year or the most calculated setup you have ever seen. I will reveal exactly which one it is before this video ends. Let me show you the full picture. Let us start with the data that mainstream media completely ignored this week. From May 20th to May 29th, 2026, United States spot XRP ETFs recorded $35 million in net inflows. During that exact same period, Bitcoin ETFs lost $1.7 billion, and Ethereum ETFs shed $309 million. Think about what that means. Every major crypto ETF was bleeding capital. Institutions were pulling money out of Bitcoin and Ethereum at a historic pace. And yet, XRP ETFs kept growing. On May 29th alone, XRP ETFs pulled in $11.88 million in fresh inflows. That was Bitcoin's 10th straight day of outflows. While Bitcoin was recording its longest losing streak of the year in ETF flows, XRP was recording its best week of the year. Bitwise XRP ETF led with 7.36 million. Canary Capital came in at 2.38 million. Franklin Templeton added 2.14 million. Total net assets across all U.S. XRP ETFs now stand at $1.12 billion. Cumulative net inflows have reached $1.42 billion since launch. And here's the question every serious investor needs to ask right now. Why is money flowing into XRP when it is running away from Bitcoin and Ethereum? Because the answer reveals something that most people have completely missed. The answer is not price. XRP is down 26% year-to-date in 2026. It is trading in the low $1.30s. The price performance is not the reason institutions are buying. The reason is something far more structural and far more important. XRP has a different narrative. Bitcoin and Ethereum ETFs are pure price bets. When sentiment turns bearish, institutional money exits fast. But XRP ETFs are attracting a different kind of investor. One who is not just chasing price. One who understands what the XRP network is actually being built for. JP Morgan forecasts that XRP ETF inflows could reach $4 to $8.4 billion in their first year. That is, if the Clarity Act passes. Standard Chartered projects the exact same range. Two of the world's most powerful financial institutions pointing at the same number. In May 2026, just delivered the strongest monthly inflows of the entire year. $118.29 million in a single month, including a single week record of $60.5 million for the week ending May 15th. The institutions are not just watching XRP anymore, they are buying it, systematically, quietly, while retail is distracted by Bitcoin's bleeding chart. But wait, because here is where the story takes a turn that nobody saw coming. Stop everything, because what I am about to tell you changes the entire picture. On May 28, 2026, Ripple co-founder Chris Larsen moved 50 million XRP to exchanges. At current prices, that is $175 million. One of the most powerful insiders in the entire XRP ecosystem just sent that amount to exchanges. The XRP community erupted immediately. Is he selling? Is this a dump? Is Ripple about to crash the market right when ETF inflows are at their peak? Let me give you the full context, because this is not what it looks like on the surface. Chris Larsen has been periodically moving XRP to exchanges for years. These moves do not always result in immediate sells. In many cases, they are custodial transfers, OTC arrangements, or charitable foundation movements. Larsen has publicly donated billions of XRP to charitable causes over the past several years. But here is what makes this move different: the timing. He moved during the exact week XRP ETFs hit their best inflows of the year. That creates maximum market attention. It also creates maximum FUD. And maximum FUD during maximum institutional inflows creates something very specific in the derivatives market. It creates short opportunities for traders who read the fear wrong, and long opportunities for institutions who understand the fundamentals better than retail. Remember what we talked about just days ago. $227 million in short positions were stacked against XRP. Add Larsen's whale move to that picture, and you have a market where fear is being manufactured, at exactly the moment when the underlying fundamentals have never been stronger. Here is the data that puts Larsen's move in full perspective. XRP trading volume surged 158% to $3.62 billion. That is not a dying asset. That is a market with explosive liquidity. And on Coinbase specifically, buy-side pressure was 7 times heavier than sell-side. On the same day Larsen moved his XRP, 7-1, buyers versus sellers. On the same day the community was screaming dump. Let that sink in for a moment, because the data and the narrative were pointing in completely opposite directions. Now let me show you the third layer of this story, because this is where it gets extraordinary. Bitcoin and Ethereum ETFs are not just seeing outflows. They are seeing a structural shift in institutional thinking. On May 28th, U.S. spot Bitcoin and Ether ETFs saw a combined $350 million in net outflows in a single day. That followed $121 million in Ether outflows the day before. The institutions that built their crypto ETF exposure on Bitcoin and Ethereum are rotating. Some of that capital is leaving crypto entirely, but some of it is looking for a new home. An asset with a different story. An asset with regulatory progress. An asset with real institutional partnerships. An asset with government-level adoption. And right now, in May 2026, there is only one major crypto asset that fits all of those criteria simultaneously. XRP ETFs are getting the institutional bid that Bitcoin and Ethereum are losing. This is not speculation. This is so-so value data. This is real capital movement. This is happening right now. Let me give you the Clarity Act context, because without it, none of this makes complete sense. The Clarity Act passed the Senate Banking Committee on May 14, 2026, in a bipartisan vote of 15-9. Senate floor vote is targeted for June. House passage targeted for July 4th. If this bill becomes law, the SEC and CFTC classifications for digital assets become federal law, and XRP's classification as a commodity, not a security, gets locked in permanently. JP Morgan and Standard Chartered are both projecting $4 to $8 billion in XRP ETF inflows if the Clarity Act passes. That bill is now closer to becoming law than at any point in history, and the institutions buying XRP ETFs right now are positioning before that capital flood arrives. They are not waiting for confirmation. They are positioning on probability. That is how smart money always moves. Here is the bottom line that every viewer needs to understand today. $1.7 billion fled Bitcoin ETFs in 10 days. $35 million flowed into XRP ETFs in the same 10 days. A co-founder moved $175 million to exchanges. Buy-side pressure on Coinbase was 7 times heavier than sell-side. Volume surged 158%. ETF cumulative inflows hit $1.42 billion. And the Clarity Act is weeks from a Senate floor vote. The bears are screaming dump, the data is screaming accumulation, and the institutions are quietly doing what they always do, buying when retail is afraid. Either the smartest money on the planet is wrong about XRP, or retail is about to miss one of the most important setups of the entire cycle. Watch the Clarity Act Senate vote date. Watch the weekly XRP ETF inflow numbers from so-so value. And watch what actually happens to Chris Larsen's 50 million XRP over the next 30 days. Those 3 signals will tell you everything you need to know. If this video changed the way you see XRP, hit that subscribe button right now, because what is coming next makes everything I just told you look small. I am Ethan Brooks. Stay wise, stay positioned, and I will see you in the next one.